The Dunham Quarter in Twos gives you a concise outline of what we view as the most notable economic events that occurred this quarter, involving domestic markets, international markets, and the bond market, all in about 2 minutes.
To understand the second quarter of 2023, we want you to imagine a race, but the runners are segments of the world's financial markets. At the starting gun, two runners, each bearing the flags of the U.S. equity markets. One, the S&P 500, the other, the tech-heavy Nasdaq, take a lead that they do not relinquish as they cross the finish line. The athletes representing international equities, international bonds, and bonds from the United States are still at the starting line, and some with small steps forward and some with small steps backward. This was the story for the last 3 months in the financial markets. We saw that consumer spending in the U.S. was up, and the labor market remains robust. Also, GDP, which measures the growth of the U.S. economy, was revised upward for the first quarter of 2023 to 2% growth. We feel the growth momentum continued into the second quarter as we saw stocks go higher. Seeing that the Fed raised interest rates in May, we can assume they are trying to combat inflation, which could slow our economy in the quarter ahead. The S&P 500 saw an 8.74% return, and the Nasdaq 13.05%. With bonds, you need to understand that, generally, when the yield on bonds goes higher, the value of a bond decreases. We can see that interest rates may rise in 2023, as the bond market was basically flat for the most part. We saw the Bloomberg U.S. Aggregate Bond Index move downward to negative 0.84%. Inflation worldwide continues to be well above the targets the central banks would like to see. That means the central banks will continue tightening monetary policy. Looking back at the quarter, we saw the MSCI ACWI ex-US was up 2.44% for the quarter. We saw rising interest rates, and the money tightening policies from central banks had their toll on the international bond market as the Bloomberg Global Aggregate Bond ex-US Index declined negative 2.6% in the second quarter. Just as in any race, most runners have their day. For this quarter, U.S. equities took the podium. But remember, investing isn't a short sprint, it's a marathon. This is why diversification is what we consider an important investment strategy. A well-balanced asset allocation strategy is like your hydration station. It keeps you moving at a steady pace, whether the track is smooth or riddled with hurdles. After all, it's not just about who runs the fastest, but who can go the distance.
Please subscribe to our channel to stay up to date on the latest Dunham insights.